You haven't got to get too complicated. The simplest deals are the best.
What property investment strategy are you looking at doing? Rent-to-rent, serviced accommodation, HMOs, flips, deal sourcing, commercial to residential? We're going to look through a dozen property investment strategies and tell you whether they're worthwhile in 2024, and if they are worthwhile, what you should be focusing on so you capitalize on them big time. Now, to do that, I'm joined by my very good friend and property mogul and all-round property expert, John Howard.
Ranjan, I didn't know you knew that many strategies. That's fantastic. Fantastic.
I know.
Shall we go now? Shall we go?
I know one or two. I've been taking notes from you, John.
Yeah, I don't do half of that lot, that's for sure.
Listen, a lot of people bang on it. Let's just dive straight into
Absolutely.
it. You know, and we've done plenty of podcasts with John, and you can check up some of them. They're on the playlist, so you can find out more about John there. But a lot of people bang on about rent to rent.
Yes.
What do you think?
Well, I think it's called subletting, isn't it? That's what it is. It's subletting. It's subletting.
Yeah.
Subletting. And there's nothing wrong with it. And most people that put their toe in the water start off with rent to rent. And I think, if you haven't got a lot of funds, then I think it's a great strategy for the right people. But you've got to be the right person to do it. And one thing that worries me about it is if you get a 5-year lease off someone, another landlord who doesn't want the hassle, doesn't want the bother, and there's a good margin in it, you've got to remember that it's got to be put back in the same condition when the 5 years runs out. Although, of course, you might have an option to purchase at that point. I do understand that. So just be careful that it complies with all the laws, the licenses from the council, the fire officers, and everything else. And remember that it won't be in the same condition in 5 years' time as you take it in.
Yes, because a lot of people that will be looking to rent will be looking at a way of optimizing the cash flow.
Absolutely.
Over and above letting that residential property as a single let.
Yes.
And that's going to be through changing it to HMO, housing multiple occupation, or serviced accommodation.
I mean, it may already be in that, and it just hasn't been managed very well, or they've just fed up with it, had enough of it. I mean, I started my career doing bedsits in those days, called bedsits, So, we've all done it. Some of us have moved on to other things, but if that's what you're good at and that's what you want to do, fill your boots.
Who do you think is the target landlord to approach for a rent-to-rent?
I think people your age.
Go on.
People who are coming up with retirement. And
that's so mean.
And people they've been in the game quite a long time. Probably they've had enough. They don't need the money so much. If you don't need the money so much, you're going to be much softer on a deal because you want to get out. You may want to go and live abroad or whatever.
I think you're right. There are a lot of people who are tired themselves.
Tired and retired.
And tired properties.
Yes.
And I think a lot of the reasons why people are tired is because they haven't got the right systems in place and they haven't got the right support team in place to make the management of that property non-tiresome.
Yes.
So if you can deal with that and you can make the property a little less tired, then you can offer a fantastic solution for that landlord.
In terms of margin, what sort of net margin do you think you want to be making on a rent-to-rent annually?
I'm not interested in residential rent-to-rent. Commercial rent-to-rent is a little bit more of a different thing, but I would be looking for quite a high margin 30%? Because I think it may be more.
Interesting.
Because your end strategy has got to be something I feel that the existing owner is not doing.
And also, what I'd also say is always take photographs of the building when you take it on to prove the condition it was in, or video, whatever. But a camera's good because it has a date on it and a time on it.
Let me rephrase something that I just said. When I would only do rent to rent, and I'd recommend people only think about rent to rent if there's an option to purchase at the end of that fixed term period. Because then there's a reason why. Because invariably, if you can pre-agree the price, by that time you should be able to muster up the finance to buy that property at that time.
Yeah, I don't think it's a bad idea, but I always worry about these options because people, I'll give anyone an option on any properties I've got, but it will be expensive.
Well, I guess that's a game, but that's you, because you're an expert negotiator.
Oh.
The reason why...
Not always.
But the reason why the property market is imperfect and it gives so much room for opportunity is that unlike the stocks and shares market, where the market makers make the price of British Telecom shares and it's just fixed and that's it, the property market is imperfect because some people are great negotiators like yourself, some people aren't so great negotiators, and that's where the opportunities to be had.
And also personal situation comes into
That's
it.
true as well. Yeah. And also how tied they are into the getting the optimum value of the property, especially when they've owned it for 30 years.
Yeah.
So that's rent to rent. You know, deal sourcing is touted quite a lot. What do you think about deal sourcing?
Where do we start? I mean,
you are a deal sourcer. You run a chain of estate agents.
Well, I don't call them. And by the way, not one of our 42 members of staff could find a deal. So that's not a lot of good. They sell houses. So it's a very different skill set.
No, that's true.
Very different skill set. So I'm a deal sourcer in as much that if I get offered a deal that isn't in my vocabulary, I don't do that sort of thing. And you do, Ranjan, I'm going to ring you up and say, Ranjan, I've got this deal. Do you want it? And you'll go, yeah, okay, I'll have a deal with it. You know, I'll go and check it out. If I do, I'll give you a 2% finder's fee. And you know, and that 2% is useful. You know, it's useful for all of us. Pays the petrol, helps pay the school fees, whatever it might be. So we're all deal sourcers in some way or other. I've got two people I work very closely with, have done for 30, 35 years. They earn between 100 and 200,000 off, between 100,000 and 200,000 pounds off me a year, finding me deals, finding me deals, and I gave them 2% on everything. Now, there are an awful lot of people being trained to be deal sorcerers. And there's an awful lot of...
Did you say sorcerers or sorcerers?
Well, I call them sorcerers, which is probably wrong, sourcers. Although some probably are sorcerers because the deals they come up with, I'm not interested in at all because there's no margin in them, this, that, and the other, and so on. There's some good ones out there, and if you've got a talent for it, fantastic. But there's a lot of people out there who say they're deal sorcerers, and aren't really very good at it.
I think you've got a point. I think we need to differentiate between the deal sources that both of us have used in the past. They're very, very established people with years of experience and years of contacts, which we don't personally have.
Absolutely.
And they're getting genuine off-market properties because people don't realise that people want to sell properties off-market for all sorts of reasons. They just don't want it in the public arena. I think what I am very skeptical about is this whole idea that you can go on Rightmove, find some property up north which is on sale on Rightmove, and then magically find some southern investor that doesn't have access to Rightmove who's going to pay you massive amount for it. I think it's that deal sourcing is sorcery.
Well, I believe it is. And when they say off market, they've sent it to 1,500 people. And now, to me, that's not off market.
But do you think it's a sensible strategy for someone starting out in 2024?
I think it's a very tough thing to do, and certainly have it as a hobby. Have it as a hobby. Do not rely on it because it's spasmodic. You know, you're not going to suddenly do a load of deals first week or first month. So keep your job. I always say, unless you've got 10 properties you're developing or investing in, do not give your job up. I get so many people say, oh, guess what, John? I'm a property developer. Congratulations. How many deals you got on the go? 1. I say, well, what are you going to do the rest of the time? Well, I'm going to be a deal sourcer. I said, well, that's a tough gig. You know, if you've got a regular income, please keep it. Please keep your regular income.
Don't give up your day job, is that what you're saying?
No, not for a long time. Not for a long. You can do deal sourcing in your spare time, especially with the internet now.
Okay, on to flips. I know you like doing a lot of flips. The homes under the hammer type of deal is now the right time. And what makes a successful flip?
Well, it's all about in the buying, of course. The selling is in the buying. We've said that before. We'll keep saying it because it's absolutely true. Buying at one price, spending some money on it and selling it on. Simple. The first stage of being a property developer are the simple flips. And people move from rent to perhaps HMOs and then to start flipping the odd property. And that's great.
Freehold houses or leasehold flats for flipping?
Well, freehold houses are very simple. But the problem is, if you look at the first 5 or 6 lots in every auction, it's nearly all terrace houses that need refurbishing. And the reason for that is the auctioneer wants to get off to a good start. And they know that they are the most popular, easy to fund, easy to buy properties. So that's why they're the front of the auction. What you want to be doing in an auction catalogue is looking at the back 10 properties, because everyone's gone home or come off the internet or whatever they do these days. Look at the last 10, don't look at the first 5. In terms of leasehold flats, I think is a good angle. But then I'm confident about the Leasehold Reform Act. I'm confident about, the leasehold property and so on. So I'm very comfortable in that environment. I've done many blocks of flats, so I understand it. What's very important, if you buy a flat that needs refurbishing, please make sure you got permission of the landlord or the freeholder, I should say, before you purchase. Don't purchase a flat that needs refurbishing without the permission of the freeholder that you can actually do it, because they can be difficult, very difficult. It might say in the lease you can refurbish the flat without prior permission of the freeholder, but not if it's got any structural.
Yes.
So be careful. That lease is a serious piece of legal.
And there's all sorts of funnies in there. I mean, I did one where the lease said the floors of the flats must have carpet.
Absolutely, because you don't want to make a load of noise for next door.
Exactly. But it didn't say, but the market wants nice wood floors.
Well, that's tough.
Well, what we did is we kept the carpet, but put the wood floor on top and took pictures and videos along the way. Yeah. And because we conformed to the lease, they couldn't do anything about it.
There's always a smart ass, isn't there?
But you've got to look at the letter of what's in the lease.
You have to be really careful. But please don't be put off, because there are bargains around in these flats, and a lot of people aren't doing it. They look at terraces, freehold terrace houses, and so on. They don't look at flats.
I think there is a tendency when we talk about property to talk about a lot of bad news, new rules, new regulations, and how things are getting harder.
Yes.
But some things are getting easier. To buy a shabby property, the funding options are far more out there than when I got started.
Listen, when you started, probably you were younger than me, but certainly when I started, you could only borrow 50% loan to value, and you could borrow 50% to do the property up, but you had to put the first 50% in yourself. That's changed, and by the way, they wouldn't lend on converted flats either. So it's changed completely. It's much easier now to get funding. You can get 70%, 75% loan to value from a bridger, and they'll put all the build costs in.
So if you do want to do a flip to actually buy the property, the funds are there.
Yes.
That's fairly straightforward.
Very
if you've got the strategy to uplift that value, it's a good way of putting cash in your pot.
Sure.
To fund your future career.
Absolutely. Simple, straight. The simpler, the better. Someone came on Property Elevator. I don't know if you remember it. They came on when we were on stage live. I think it might have been the conference last year, and they said, "I want to do difficult property deals. Challenging property deals." And I said, "I do challenging property deals. I don't want to. I want to do simple deals." So there's nothing wrong with keeping it simple.
Yeah. I think, and we've talked about this before, when you're doing flips and stuff, if you can work with the existing building rather than work against it, you're going to get a better flip.
Don't start being too ambitious.
Keep it simple, keep it quick, upgrade the value, get shot of.
Bang on.
HMOs, houses in multiple occupations, do you love them?
No, I hate them. Next.
But come on, as an entry-level strategy, it is easy. They're easy to buy. They're easy to manage a few of them, and you get good cash flow.
Yeah, and in my day they were called bed-sits, and now they're called luxury or something, aren't they? What are they called now? Luxury HMOs or something?
Well, you have
does that mean they've got a colour TV in them or something?
Grey-coloured feature walls and a couple of mustard fluffy cushions here and there.
So the thing about bed-sits or HMOs is that we've all cut our teeth on them. And the rent-to-rent would be if you're going in stages, would be rent to rent, wouldn't it?
Yes.
HMOs.
Yeah.
And then what do you call it? Flipping, and so on. So nothing wrong with being HMOs, and of course some people have got many HMOs and make a really, really good living at it.
I mean, it's a good time to...
Don't need to do any more. They're happy.
Well, one of the things that we have to consider in any property, in all property deals, is our exit. And I'll tell you, we've never had a period where we've got absolutely no voids in any of our HMOs. Anything is pre-let. The market for these things is absolutely ballistic. So at least it's something that the exit is guaranteed.
Yeah, no, and you run a very, very tight ship, and you're an expert in it, Ranjan. Like any business,
pretty much everyone I know is in the same boat. I mean,
Yeah.
There were voids in other times, but now it's...
there's such a housing shortage, especially in the south. Remember, there's no shortage in the north, so people must realise that. The north of England, there's not a housing shortage.
North of it, I thought you meant Enfield.
Oh, well, you did, because you get a nosebleed if you get that far, don't you? Crikey. I mean, your car's only done about 3,000 miles a year, doesn't it? Something like that.
Oh, dear. What about holiday lets and serviced accommodation?
Well, funny enough...
I haven't done that one, actually.
Well, funny enough, I have. You might be surprised to know. So a number of our properties around the UK, some lend themselves to be holiday lets. So my stepdaughter, actually, she's the one who's kicked my backside and said, look, what the hell are you renting these out for £700 a month, when if we refurbish them, spend £15,000 on some furniture, we can get up to £2,000 a week. Can we? Oh, that's a bit new to me. So we've done that on a number of the properties, some more successful than others. So you need a hook. The hook might be because we've got some in Buxton, Derbyshire. Well, great walking country. We've done a couple near the Belfry in Birmingham, and Drayton Park, and near the 15 minutes from city centre, and they haven't worked so well, which surprises me. We've actually put them back to normal rents.
That surprises me, because the holiday let industry is of course affected by seasonality and issues, I guess. Whereas a lot of people have had huge success in city centres, like Birmingham, for example, where there are all these conferences and temporary workers and contract workers, so they're full because who goes on holiday in Birmingham? Sorry, folks who live there, but
that's just rude. I've got quite a lot of properties in Birmingham. Can I just tell you? I'll ask you this question: where is the most successful holiday home destination in terms of vacancies or accommodation, in terms of the level of occupancy in the UK?
I've got no idea.
Have a guess. I know you don't holiday in the UK very much. You're always flying around the world, but whereas I never go anywhere. But anyway, go on.
I don't know. Maybe Cornwall or something.
No, Southwold in Suffolk.
Wow.
And who's just paid 1.8 million for Lloyds Bank in Southwold in Suffolk? Do you know anyone?
Probably you.
Me, yes. And we've got we're converting it to flats and cottages, and we're going to get, apparently...
Sorry, you're going to convert a bank building into cottages?
Yeah, well, it's flats and cottages. So it's flats.
Has it got land at the back?
It's flats at the front, and it's right in the market square.
Oh,
it's a very iconic... Southwold's
a
very iconic coastal town, up to £1,000 a foot. That might
That's pretty good.
ring some bells, in London, so it's very expensive. And we're doing a large 4-bedroom flat there, so 2 families can live in it. We're going to use it ourselves a bit. £4,000 a week in the summer.
Wow.
So, but of course we're
and
paid a lot of money.
seasonality?
Highest occupancy rate in the UK, about 82%. Yeah.
So I think with serviced accommodation, it is so much, you can't do it on a speculative basis. I mean, like pretty much you can, if you want to do HMOs, it'll work practically anywhere, not rural or anything like that, but in any town or city, it'll work. Yeah. You don't have to do too much market research, but you should do, because it makes a difference between a good one and a cracking one.
Whereas the holiday lets, you do need to be a bit careful, because you can get it very wrong or get it very right. I always think if you can, as the bottom mark, if you can double the income you get on a short hold after all costs coming out, that's where you need to aim for or be, and you might be able to get 3 times as much. So you can double, you might get 3 times as much, but work on double.
commercial to residential conversion.
I'm wasting my time talking about this, aren't I?
PD.
Hey, I'm wasting my time being sitting
Why?
here. Well, because you're the expert.
Oh, you do a few of these as
Yes.
well. I mean, but as a strategy for 2024, I mean, we got a massive oversupply of commercial property.
Totally.
And the values have fallen far more than residential.
Far more. But commercial has been in recession for 5 years, hasn't it?
Yes, absolutely. Absolutely. What do you think the opportunities are?
Well, I think they're less now you've told everyone. That's what I believe. I mean, 2012-13, Nicholas Warwick would be a great friend of ours, of course, a property elevator. I mean, he really rang the bell for a number of years with these micro units he was doing, because the rules changed, the planning law changed, and now he can't do micro units. He still does very well. I think it's got a bit harder. You think it's got a bit easier. I know.
I think there's a cracking opportunity there, because I think particularly with shops and uppers, because I think there is they're the larger developers who probably won't get out of bed for a shop with making 2 or 3 flats above.
I will, but there aren't many that will.
There aren't many that will. They're looking for larger projects.
Yeah.
And there is a psychological barrier in most people's heads where they feel confident about putting a few ensuite bathrooms and some kitchenettes in an HMO. Yeah. But doing a flat seems like a massive extra step.
Not a lot of difference, is it?
There isn't a lot of difference. So there's this almost open goal of opportunity where big guys ain't interested and a lot of little guys think they aren't experienced enough.
And you're paying... not in London, but outside London, you're probably paying £50-60 a foot freehold.
Well, London, I don't think you can do. I mean, I know you think I do a lot in London, but the trouble with London is I like the Brr strategy, where you buy, refurbish, you rent, and you refinance to exit.
And you keep.
And you can't refinance and leave and
get your cash out.
And get your cash out when the yields are about 3% on the end value.
You can outside London.
But you can outside.
Do you know what we used to do in the 1980s? We used to buy shops with flats above, like a shop and a flat above. We used to sell the flat above off, to a first-time buyer. Well, perhaps not a first-time buyer, to an investor or whatever. And we used to let the shop and then sell the shop as an investment. Very simple. And there's still things like that around. Like we said before, you haven't got to get too complicated. The simplest deals are the best normally.
Yes. And there's a whole bunch of new PD coming out, of course, where instead of just being able to make 2 flats above a shop, you'll be able to make 4 flats above a shop. That's all
I'll make a
coming out
note of
this year.
that. I didn't know that.
Lease options. What do you think of that as a strategy?
Oh, you know what? People do lease options. I think lease options for 5 years or so are probably a good thing. What frustrates me is when they get a lease option to purchase a development, sort of property to put into flats or something like that. Well, just buy it subject to planning. Just buy it subject to planning and get on with it. You can over elaborate and you can over complicate deals when it's not necessary. Sometimes it's necessary. You may not have the money at the moment. You may want to. The owner may want to get a bit more out of it before he lets it go. Lots of different things. But I always think the simple policy is the best.
I get you with land development, and that might be the kind of stuff that you've done it makes sense to just buy subject to planning. It's also better for the seller because an option means exactly that. You've got the option to back out. Exactly. But subject to planning means if you get the planning, you've got to buy.
And by the way, if you're doing an option with anyone and you're the person who owns the property, make sure there's some what I call hurt money in there. So make sure, or walkabout money. So make sure you're getting, 50, 60, 100,000, 10,000, whatever a pro rata it should be, off them. Yes. Because it keeps them honest.
Yes.
And the same if they're going for planning permission. If you can get a non-returnable deposit off them, it keeps them honest. It makes them concentrate on the job and get it done.
I think the one of the great things about lease options is it's a case of, I think a lot of people learn about strategies and they're like, it's like having a spanner and then trying to tackle every DI job with a spanner.
Yes.
But, in situations, the scenario I've been successful with is a tired landlord, tired property, they own the property cash.
Yes.
And then you're doing a lease option. They don't need the money up front. You're offering a little bit more than
Yes,
than
because
today.
because it's an option.
Exactly. But then in
So
5 years' time,
Yeah.
you've got the opportunity to up the cash flow
Yes.
and therefore raise the finance at a later time to buy that property at that uplifted
You see,
value. And then everyone wins.
I'm old school. I'd rather get it cheaper now. It's just a different mentality. I'm not a great fan of it.
Yes, but you're talking about now,
Yes.
and I may not do that now, but I did this when I was starting.
Yes, yeah, I see that. Yeah,
And it was an
maybe
easier way to
maybe
acquire.
that's the only option you have at the time.
Yes.
Excuse the pun.
Yeah,
But
yeah,
it might be the best thing to do, and I understand that. And sometimes it's difficult for us to go back, in your case, 70, 80 years or whatever, and actually, sort of remember what it was like. It was tough, and you need a break. And I love trying to help young people because it's inspirational for me as well as them, hopefully.
Auctions. We've talked about auctions
We have.
plenty of times, but it's a great strategy for finding deals.
Favourite strategy of mine.
But what do you favour? Should you try to get auctions should you try to get auction deals before the auction, at the auction, or post auction?
Always post auction. Always post auction if you can, because
But then you've got your heart set on something. Shouldn't you try to get it before the auction?
no.
And
Do you know why?
Go on.
You shouldn't have a heart.
Not
If you've
heart.
got a
I
heart,
used the wrong word.
If
Yeah.
you've got a heart in
No,
property,
you're right.
you're in the wrong game.
You got me on that one.
You should be, I'm not saying you are, Ranjan, heartless.
What I mean.
Emotionless, heartless, cold and calculated
Okay.
and organised.
We'll come on to that in a minute.
Yeah.
Tell me why afterwards.
Because the vendor, and this is where the heartless comes in, is stuck.
Mm-hmm.
It's probably been on the open market for a year, not sold.
Yep.
Gone into an auction, not sold. So they are very
Where do they go?
vulnerable. They want to sell. Where else do they go? Put it back on the open market. Never works. Never works. You've got their foot on the neck. Keep your foot on their neck. Get a deal done probably within 24 hours of the deal, because it then goes a bit stale if you don't. So get a deal done. You can negotiate the terms. You may say, well, look, I'll buy it, but I want an 8-week completion, not 4, because you want to raise the money. You might say 3-month completion. And if the auctioneer says to you, oh, that's far too long, when's your next auction? Oh, 10 weeks' time. Well, I'll have completed by then. So after the auction, you are in control. Up until the auctioneers and the vendor is in control. As soon as that auction's finished, they're in big trouble. And by the way, remember, the auctioneer only has 1 month to sell that property after the auction. That's what his or her sole agency or auction agreement says. So they want to get it sold. Whatever bullshit they might give you, they want to get it sold. I know. We own auction houses. I've been on both sides of it. And never tell them what you want to pay for it, either before the auction, because guess what? They just go and tell the auctioneer. They'll go to so much. Keep your mouth shut.
If you've got I get all that.
And read my book.
I get all that. Post-auction offers, great.
Yeah.
But pre-auction, I mean, I've been in situations where I can see an opportunity in that property.
Yeah, well,
and I'm not sure whether other people are seeing the same opportunity. And I'm not sure whether the vendor or the auctioneer have necessarily seen it. So I don't want it going to the room.
No.
So if I can secure it there and then, I mean, one of the strategies I've loved is underwriting.
Yes.
Can you tell people what underwriting is?
Yeah, so underwriting actually started with auction house on the whole. We checked it out, to make sure it was legal, because we weren't sure. It is legal, and that's what we did. So what happens is with underwriting, there's certain lots in every auction where the vendor really wants to sell, and in that situation, what you can do is do an underwrite, and an underwrite basically means that you agree to buy the property off the vendor, you sign for it, at a fixed price. It may be the reserve, the guide price, the reserve price, or whatever. It's left in the auction. If it sells for less, you pay the prices that you bought it at. If it goes for more, you have a choice of buying it, but less the commission or the amount you are going to pay to the vendor. So let me give you an example. Anything over the purchase price, 45% of the money goes to the original vendor, 45% goes to you, and 10% normally goes to the auctioneer. Great for auctioneers, by the way. So if it's, for instance, if it was £50,000 you paid for it, you agreed to and signed on it, and it went for 100, you can do the maths.
Yes.
Because you used to work for an accounting firm. So, you work 20, what's it, 20,000 each to you, 20 to the vendor, and whatever it is to the auctioneer. So that's a really good strategy. You've got to be ballsy.
So you win, of course, and you win even if you lose.
Yes, you win if you lose, but don't forget,
bid.
if you still want to buy, you can still buy it, carry on buying it, but you just pay the 55% extra.
No, but
so 45%
that's great.
you'd pay to the vendor, and the 10% you pay to the auction. You still pay that.
Yes, but it gives you another option.
Another angle.
If you have underwritten a deal,
Yes.
and you've underwritten it at 100,
Yes.
and then, but obviously, if no one buys it, you have to be sure you want that property and pick it up for 100.
Now, Ranjan, you make the best point of today, and you have, because whatever you buy, if you're looking to turn it on to someone else, you only want to do that if you really want to buy it yourself. Because if you want to buy it yourself, you're buying it the right money. If you think, it's cheap, I'll try and sell it on, never works. You need to be committed to buying that anyway and have the money.
And have the money. Yeah. And if it goes for over 100 to someone else, then you benefit from the share of that uplift. But the other side of it is, if you want it and you are in the bidding and then you win, then it actually puts more fuel in your tank. Because if I've bought the property and I've bid at the auction for 120, but I've underwritten it 100, I'm not paying all that 20k difference.
No, you're not.
I'm sharing it. So I've got more fuel in the tank than the underbidder.
It is. Yeah,
it's
you
quite,
are.
kind of quite clever.
It is. And
I don't know whether I've explained that well.
Well, I think you explained it very well. And it is a strategy. And I know people, that's all they do up and down the country. But it isn't for the faint-hearted.
No. It's a bit more advanced. I mean, a lot of strategies you can dabble in, but to make them really go on fire, you've got to have knowledge, you've got to have a little bit of experience.
And if at auction you want to be super safe, buy after the auction to be super safe, because you've got time to look at it again, time just to calm down. You can get a longer completion date. You don't have to stick to what the auctioneer says. You just got that little bit of time just to calm down with it, because it is stressful buying at auction. Your heart's pounding. You end up paying more, probably more than you want to. So you get away from all that and you can just calm down. And there's lots of stock that doesn't sell at the auction.
Buy-to-let. When I mean buy-to-let, I mean vanilla buy-to-let.
Yes.
I mean, when I started in property, I was a management consultant. I had a busy full-time job. And you'd literally buy a property on a Friday and a tenant would be in on the Saturday. You've done nothing to it. It was just buying a property and it would make a positive cash flow. Vanilla buy-to-let. Is that dead or alive in 2024?
It's only alive if you can put 50% down. And if you put 50% down, you have to wonder why you're doing it, I think, really.
That's
because
true.
you can get 6%, 5-6% on interest. So you're not going to make 5 or 6% profit. You're looking at capital growth. And capital growth over the next 2 years is going to be pretty much zero, probably. So is there any point? I'll be waiting and seeing and getting interest rates to come down before I did that. But then everyone else maybe listening to this maybe then start doing the same thing. So then you may want to do the opposite, because property prices will go up probably in the next 2 or 3 years. So it's a chicken and egg. But you need 50%, don't you?
I think, there are some parts of the country where it's still possible, but the capital values are so low there, and the prospects are so low.
They don't go up, Ranjan.
I know. It doesn't make sense, and
Don't worry, I've got some, I know.
But I think it's if you don't have a strategy for adding value, either rental or capital value, don't do it.
That's really good advice. That's the second bit of good advice you've given today.
Well, I try.
Yeah, very good.
Okay, title splitting. You know, people advocate title splitting as a strategy.
This drives me. Am I allowed to swear?
No, you can if you want. We don't have
bloody mad.
I'm glad. We agree on something there.
Because it's absolutely bonkers to have people teaching people how to title split. All you do is you ring your solicitor up and say, I'm selling one of these properties off, or one of these flats off. Create the lease, please, so I can sell it. Job done.
I think
Job done.
there is this.
It takes a minute.
There is this myth that if I've got, say, 3 flats,
Yeah.
and I split the title, and I'm suddenly going to get higher valuations for those flats individually, which I don't fully get because I have blocks of flats
Yes.
and I get them remortgaged on commercial loans. And the
Yes.
valuer comes in and they say, and on their report it says flat number 1 is valued at this,
Yeah.
here are the comparables, flat number 2,
Absolutely.
and they aggregate them all together. And I see no difference between those and...
Ranjan, the only way that
I don't get
works,
it.
well, the reason they do it, I think, is because they get different lenders on each one. So if you're going to get different lenders on each flat, they need to be
But you will,
independent leasehold flats.
I get you on that,
Yeah.
but they won't get different end values. They may get different loan terms.
Well, they might do, and the reason they might do at the moment, if you've got more than 2 flats or in a block, it will be valued on an investment basis.
Yes.
At probably 8 to 8.5%.
Yes, yes.
Whereas if it's only one property, it'll be valued on, or 2, it'll be valued on a vacant possession value. That's what most lending institutions send out to their valuers. Now that may change, but at the moment, and I've been caught with that on a block that's worth 1.3 million. We had a very small loan of about 300 grand. I wanted to put it up to 600,000-700,000, and they came back and valued it at 8.5% yield, which meant the whole damn lot was only worth about 900,000, which is bonkers.
But that
You know,
might
less than
work
that.
with the smaller blocks of
Yes.
flats. But after a certain point, let's say you've got a block of 8 flats or
Yes.
more, lenders start saying, well, how many do you own in the block?
Yes.
You can't have more than 2 mortgages on flats in this building, so you end up having half a dozen different lenders,
Yeah,
and it's
there's
quite
I
difficult
think
to juggle them all up.
There's a sweet spot. There's a sweet spot of 2 properties, I think, because over that you're considered a commercial investment, whereas under 2 you're probably a buy-to-let investor. So that, I think that's the difference, and that's why I think people will try and get title split, leasehold, put a long lease on individual flats rather than keep it freehold.
So if you've got a small block where you just got 3 or 4 flats and you're keeping it on, would you title split and get individual mortgages, or would you just bung them all on one?
I have it all on a large facility normally, so I just have it all on the same, and then if they're sold, we create a lease, and it's sold off, and the money normally goes all. No, normally the bank take all the money, but to start with. But,
I think I think that's the point, and I just reading between the lines of what you said. When you've done a few of these, you end up getting a facility which covers a few properties, and you start negotiating a wholesale type of agreement on your loan.
Ranjan, to be fair to a lot of people watching this, listening to this, they're not in that situation. They're not in our situation. Some are probably more successful than we are, but some aren't. And if they're starting off, it's important that they understand if they do more than 2 units in one block, it's going to be considered investment, and it'll be 8.5% yield. They can value that before they start. We're not wasting, like I did, thousands of pounds on valuations. But if I knew that in the first place, I wouldn't have bothered.
And this is why I think, we've talked about this in the past, there's this new permitted development right that's likely to come through this year, where a house, and this is revolutionary because we've never had permitted development which allows a residential property to be split into 2 dwellings. We've had PD for commercial properties to be split, but never for residential.
But I understand
so
that.
2 will be fantastic for the starter developer, won't it?
It'll be great, but don't forget, you still need building regs.
Yeah, of course you do.
Still fire precautions,
of course,
and everything else.
Yeah, of course.
People will think, we can just do it.
No.
You can't just do it.
No. Building regs, minimum space standards,
and if you
natural light, all of that.
And if you can't adhere to all those rules, you still can't do it.
Yeah, of course.
So that's important.
Yes, I think that goes without saying for any property development.
It does for you, but it may not for everyone.
Okay. Well, that being said,
yes,
for entry-level people to pick up a freehold house at auction, which is shabby, which needs tons of work doing anyway.
3-bedroom semi are great because you get a 1-bedroom flat out the ground floor.
Yeah.
Just make sure the stairs is in front of ideally the stairs is in front of the front door.
Yes.
So you can then put a door the side of the stairs to go there. But don't forget, fire precautions are very, very expensive.
Mm-hmm. Yes. But and I think that will come out in the wash in that low value properties, it just won't be worth doing where the house is 70 grand, or the flat
I
is,
agree.
50, 60
You
grand.
probably want the flats to be worth about 100,000 each when they're done.
Exactly.
Yeah.
So it's the mid-value areas and above where you'll be able to have a lot of fun
I've
with
got
that
a load of old
strategy.
rubbish I might be able to do that with.
What about the 12th strategy I want to talk to you about is commercial buy-to-let. Buying a commercial property for the purposes of either repurposing it to alternative commercial use and letting it out, or as a commercial let investment. Is that the right thing to do for 2024?
I love it, but it's not for the faint-hearted, because if it's a list of buildings, there are no rates. If it's not, you're paying full rates. It is not for the faint-hearted. I'm keen to buy more. I'm keen to buy them vacant, which people would worry, and banks worry, of course.
Go on, why?
They worry because you may not ever
not
let
why
it.
they worry. Why are you buying them vacant?
Because I want to make a big margin. I'm not messing around. So if I can buy a property at, say, the whole property at, say, 250,000, and I think I can let it for 50,000 a year, so I always work on a 10% yield, whatever it is, really within reason, as a fag packet approach, as it were. So if I'm paying 250 for it, spend 50,000 on it, perhaps tidying it up, the tenant does the rest. I've got it let at 50,000 a year. Happy days.
Absolutely, and I think there are lots.
It's worth £500,000. I'm in for 300, and it's worth 500. I then refinance it, because then you can refinance it better at perhaps 60% on a decent lease. I get all my cash out. Remember, if you're buying commercial, the most you'll get off any bank just about, especially if it's vacant, is 50% loan to value, the maximum you're likely to get.
I think that demonstrates the difference, I guess.
Yeah.
Whereas a vacant residential property is worth the same as an occupied residential property.
Well,
it's about bricks and mortar. But
absolutely.
with a commercial, a vacant commercial property is worth less.
Yeah.
I mean, the other strategy, the other spin that I like to do on that is to invest in commercial buy-to-let for a pension.
Yes.
So you buy the property vacant outside your pension, bung a tenant in it, and then sell it into the pension.
Absolutely.
Because the stamp duty on commercial property is much less, of course. You're not taking much of a hit there.
No.
And you've got the uplift profit in your
Absolutely.
company.
Yeah.
You've got the property then in your pension. And you can contribute the profit that you made into your company back into pension again to buy the next one.
Absolutely.
So you can have a little bit of fun.
And pay no tax.
And of course, the Conservatives have just increased the limits of
now,
contributions, and I think they've taken the lifetime limit away as well. But that might be put back later on.
It may well be put back by Labour when they get in.
So we've covered a dozen strategies in this.
Fantastic. What's your favourite one, Ranjan?
That was my question. I was going to ask you.
I've got in there first.
No, I love the. I think commercial conversions.
What a
is
surprise!
Amazing.
God, you're consistent. I'll give you that. You are consistent.
No, because I mean the commercial values, I think, are particularly with the interest rate rises and the fact that so many people who have got commercial properties are facing covenant issues with their banks.
Yes.
And they're having to sell and all the rest of it.
Yeah.
And a lot of people who own commercial properties, they're not set up for doing conversions.
Not only that.
I mean, they live 300 miles away.
They haven't got an emotional tie in it.
Exactly. Yeah. Oh, it's not in their remit. They only.
It's been written down in the books probably, and they take proper advice from a chartered surveyor normally.
Exactly.
Yeah,
and you bought a bank, I bought banks. I mean, a lot of these buildings that we end up buying, they've been in the same ownership for the last 40 years.
Yeah,
because they were just bankable cash flow assets.
Yeah.
And when there's no tenant, there's no need for them. They don't understand why they should own them.
No, absolutely. You can
So
ask me the
opportunities.
question.
Yeah, what's
then.
your favourite?
Oh, good. I get the good. In the end, you got there in the end, Ranjan. Well done. I think buying after the auction. I love a trade. I love to, because it's instant. You go in there, you sign the contract, you own the damn thing from day one. You're not waiting 3 or 4 months to buy it. You own it. You can trade it out, split it up, do the title splits if you want. There's lots of opportunities. I'm a natural trader. If I could do nothing else but trade property every day, I love buying portfolios, especially if people are looking to retire and companies and things. Yeah, I love that.
Do you miss being in the auction room? I don't like this clickety-click online.
I'm old school like you. I really, my stepdaughter loves it. She does it. I can't do it. She's on the phone to me and say, "You've got 10 seconds, John, to make your mind up. What do you want to do? You going to put another bid in or not?" I don't like it. And by the way, just one quick tip. If your hand is hovering over the mouse, the auctioneer knows.
Yeah, no, yeah.
The auctioneer knows.
They got a camera in your room.
Auctioneer knows. I don't know how it's magic, but he knows.
It's
or
true.
She knows.
It's true. There's a lot of tech.
There's a lot of tech, and I love the cut and thrust of it. I love being in the room, and I really miss that. Because not only that, you're meeting people, you're making contacts. This property business industry is about contacts. If you're quiet and shy,
That's
yes,
true.
you can do it. But I tell you what, it's a damn sight easier if you're like you, Ranjan.
Do you know the one thing I miss about the room? The one thing I miss about the room, because I've learned so much from being in the room.
Yeah.
You do so much research on lot number 10, and then someone outbids you.
Yes.
And then you've gone over your limit. So what I want to know, I want
Ask
to go
them.
and talk to them.
Absolutely. Why have
'Cause
they bought
are
it?
they a plonker, or have they got a better strategy than
Normally
me?
they're a plonker.
But if they've got a better strategy than
You
me,
want to learn from it.
That's cut and
Absolutely. And
paste.
quite often, go back and look at it 6 months later and see what they've done with it. I agree. You never stop learning. You never stop learning in this business. And anyone who thinks they know it all is a fool.
And we're no fools, you're no fools. That's about the end of this podcast. John, thank you. You've been marvellous.
Thank you.
And tell us what you think. Leave your comments in the comments below. And see you
Excuse me,
guys.
where do I pick my check up from?
Your check. We don't do checks anymore.
Oh, it's
I haven't
online,
written a
is it?
check in years. See you guys next time.